Competitive landscape, global EV market dynamics, Tesla's position against rivals in 2023 and 2025. Executive Summary. The global electric vehicle EV market is undergoing a significant transformation as we transition from 2023 to 2025. Tesla remains a dominant player but faces fierce competition from both established automakers and emerging manufacturers, particularly from China. This report provides an in-depth analysis of Tesla's current position, competitive dynamics, future projections, challenges, and strategic initiatives in the context of the evolving EV landscape. Tesla's position and financial outlook 2023 to 2025. In 2023, Tesla held over 45% of the battery electric vehicle market share in the United States, a decline from over 60% in 2020. The company's stock experienced volatility with an average price decrease of 15% compared to previous years. However, revenue projections indicate a potential rise to $127.61 billion by 2025. Driven by increased vehicle deliveries and advancements in full self-driving FSD technology. Competitive dynamics and market trends. The competitive landscape has shifted significantly with the rise of Chinese manufacturers like BYD and NIO, which have begun to outperform Tesla in overall sales. BYD became the best-selling electric car brand globally in 2022 and 2023, capturing over 11% of new registrations in China. The ongoing price wars, particularly in China, have prompted significant price reductions across the industry, impacting profit margins for all participants. Tesla's strategy has included cutting prices on models like the Model 3 and Model Y, prompting competitors such as BYD and XPeng to follow with their own price cuts. This trend reflects a broader struggle for profitability amid increasing competition. Investment trends and future projections. Despite a notable decline in venture capital investment in EV and battery startups in 2023, investment in critical minerals and battery technology remains robust. Tesla is projected to see a significant increase in market capitalization, potentially reaching $2 trillion by 2025, driven largely by technological advancements and new model introductions, including the much-anticipated Cybertruck and a more affordable $25,000 vehicle. Challenges and regulatory factors. Tesla faces various challenges, including regulatory hurdles and potential supply chain issues exacerbated by geopolitical tensions and changing governmental policies regarding clean energy. These factors could impact investor confidence and operational efficiency. Conclusion and timeline. The competitive dynamics of the global EV market are rapidly evolving. From 2023 to 2025, Tesla aims to maintain its leadership position while navigating a landscape filled with emerging rivals. Key milestones include Tesla's dominance in the early 2020s, BYD's rise in 2022 and 2023, ongoing price adjustments, and substantial revenue growth projections by 2025. Detailed analysis. Tesla's current market position. Tesla has established itself as a leader in the EV market, particularly in the United States, where it has consistently captured a significant share of battery electric vehicle sales. However, the competitive landscape is shifting. While Tesla's market share was over 60% in 2020, by 2023 it dropped to approximately 45%. This decline is attributed to the rise of competitors, especially Chinese manufacturers like BYD, which became the top-selling electric car brand globally in 2022 and 2023. Financial performance and projections. Tesla's financial performance in 2023 highlighted volatility, with its stock price averaging a 15% decline compared to the previous year. However, the company's revenue is projected to grow significantly, potentially reaching $127.61 billion by 2025. This growth is expected to stem from increased vehicle deliveries and advancements in technologies such as FSD. Analysts predict that the earnings per share could increase to $3.87 by 2025, reflecting Tesla's operational efficiencies and strategic initiatives aimed at boosting profitability. Factors contributing to this financial outlook include increased vehicle deliveries and the adoption of FSD technology. Competitive dynamics. The rise of Chinese EV manufacturers has fundamentally changed the competitive landscape. BYD has emerged as a strong competitor, leading in overall sales and capturing a significant portion of the Chinese market. The company's strategy of offering competitively priced models has resonated well with consumers, allowing it to outpace Tesla in sales volume. The price competition in the EV sector, particularly in China, has led to aggressive price cuts across manufacturers. Tesla's decision to reduce prices on its Models 3 and Y by up to 6% prompted competitors to follow suit, resulting in price cuts ranging from 10% to 20% among other brands. This price war reflects the intense pressure manufacturers face to maintain profitability amid escalating competition. Investment landscape and future projections. Investment trends in the EV sector have faced challenges, particularly in 2023, where venture capital funding for EV and battery startups saw a notable decline. However, investments in critical minerals and battery technology continue to be robust, driven by the need to secure supply chains amid rising demand for electric vehicles. By 2025, Tesla's market capitalization could potentially soar to $2 trillion. Supported by its advancements in technology and strategic initiatives such as the launch of new models. These developments are expected to enhance Tesla's market position significantly. Challenges facing Tesla. Despite optimistic projections, Tesla faces several challenges, including regulatory hurdles and potential supply chain disruptions. Geopolitical tensions and changing governmental policies regarding clean energy pose additional risks that could impact operational efficiency and investor confidence. Conclusion. The global EV market is becoming increasingly competitive, with Tesla and BYD at the forefront. As we move toward 2025, Tesla aims to innovate and adapt to a landscape filled with emerging rivals. The timeline reflects significant milestones: Tesla's early 2020s dominance, BYD's emergence as a key player, ongoing price adjustments, and projections for substantial revenue growth by 2025. Future outlook, strategic initiatives for Tesla 2025 and beyond. As Tesla gears up for the future, it is focusing on several strategic initiatives to maintain its competitive edge. Production and delivery targets. Tesla plans to ramp up production at its gigafactories to meet growing global demand, aiming for millions of vehicles produced annually. The introduction of new affordable models will cater to a broader audience. Expansion of energy solutions. Tesla is expanding its portfolio to include solar and energy storage solutions, anticipating rising demand for renewable energy products. Technological advancements. Continued investment in AI and battery technology will be crucial for maintaining a technological edge in the EV market. Sustainability commitment. Tesla is doubling down on its commitment to sustainability, aiming to minimize the environmental impact of its manufacturing processes. In conclusion, while Tesla faces significant competition, its focus on innovation, expansion, and sustainability positions it well for continued leadership in the electric vehicle market. Stakeholders must remain vigilant and responsive to the evolving dynamics of the industry as it matures and adapts to changing consumer preferences and regulatory landscapes. In the rapidly evolving global electric vehicle EV market, Tesla's competitive position against its rivals, particularly in the years 2023 and 2025, reveals several counterintuitive insights that challenge conventional wisdom about market leadership and industry dynamics. 1. Declining market share despite growth. While Tesla has been a dominant player in the EV market, its market share has declined from over 60% in 2020 to 45% in 2023. This decline occurs despite Tesla experiencing significant growth in revenue and vehicle deliveries. This counterintuitive trend suggests that even as a company expands, increasing competition can erode its share of the market, highlighting that growth does not equate to maintaining market dominance. 2. Price wars as a strategy. Tesla's decision to cut prices on popular models like the Model 3 and Model Y by up to 6% is designed to maintain sales volume amidst intensifying competition, particularly from Chinese manufacturers like BYD. This strategy contradicts the typical business approach of maintaining or increasing prices to protect margins. Instead, Tesla's willingness to engage in price cuts, which have seen competitors like BYD and XPeng follow with their own reductions, illustrates a shift in strategy toward volume over margin, raising questions about long-term profitability in a price-sensitive market. 3. Positive financial projections amidst volatility. Despite experiencing a 15% drop in stock price and facing considerable market volatility in 2023, Tesla's revenue is projected to surge to $127.61 billion by 2025. This juxtaposition of declining stock prices with robust revenue growth challenges the belief that stock performance is a direct reflection of a company's operational success. It suggests that external market factors such as geopolitical tensions and investor sentiment can significantly influence stock performance independently of actual business performance. 4. Emergence of Chinese rivals. The rapid ascent of Chinese EV manufacturers like BYD, which outperformed Tesla in sales in 2022 and 2023, highlights a counterintuitive reality: a strong domestic market does not guarantee global dominance. While Tesla has established a formidable presence, its struggles against well-funded and strategically aggressive Chinese competitors reveal the challenges of maintaining a leadership position in a globalized market where local players can quickly adapt and innovate. 5. Venture capital trends. The decline in venture capital investment in EV startups in 2023, despite the overall growth of the EV sector, presents a paradox. The decreased funding suggests a saturation point in the market where investors may perceive higher risks despite the burgeoning demand for EVs. This trend indicates that even in a growth phase for an industry, investor confidence can wane, leading to a tightening of funding for new entrants, which contradicts expectations of a continuously flourishing startup ecosystem. 6. As technological advancements versus market conditions. Tesla's focus on technological innovation, particularly in full self-driving FSD technology, is expected to drive growth. However, the reality is that advancements in technology do not always translate to market success, especially when consumers are more price-sensitive. This scenario challenges the notion that being technologically advanced guarantees competitive advantage, as competitors offer lower prices and new models. The market may favor affordability over cutting-edge technology. 7. Stock market sentiment. The mixed sentiments surrounding Tesla's stock performance in 2025, predicted to range from as low as $218 to as high as $786, showcases the unpredictability of market perceptions. This volatility underscores a counterintuitive relationship where market sentiment can diverge significantly from fundamental business performance, leading to uncertainty for investors. 8. Sustainability versus profitability. Tesla's commitment to sustainability and environmentally friendly practices may enhance its brand image and appeal to eco-conscious consumers. However, this commitment could also come at the expense of short-term profitability as the company invests heavily in green technologies and processes. This situation presents a counterintuitive challenge where aligning with consumer values may not immediately yield financial returns. 9. Consolidation among competitors. As competition intensifies, particularly among Chinese manufacturers, many smaller companies are struggling to remain profitable. The anticipated consolidation in the EV market could lead to a scenario where the remaining players are the most robust, countering the common assumption that a larger number of competitors improves market dynamics. This consolidation could result in fewer major players, paradoxically enhancing competition among the remaining firms. In summary, the dynamics of Tesla's competitive landscape in the global EV market during 2023 to 2025 reveal several counterintuitive insights. but rather on a nuanced understanding of consumer preferences, competitive strategies, and economic conditions. In the competitive landscape of the global electric vehicle EV market, critical details often get overshadowed by broader narratives about market leaders like Tesla and BYD and the rising competition from various manufacturers. Here are some significant aspects that are likely to be overlooked along with their implications for the industry as we approach 2025. 1. Market share dynamics and price wars. While many reports focus on overall sales figures and market share percentages, the implications of price wars are crucial and often under-discussed. Tesla's price reductions on models such as the Model 3 and Model Y, which were reduced by up to 6%, prompted similar cuts from competitors. This trend is not merely about maintaining market share, it reflects deeper issues of profitability and sustainability in an increasingly saturated market. Significance: the ability of companies like Tesla to engage in aggressive pricing strategies could lead to thinner profit margins across the sector, impacting long-term investments in innovation. As companies prioritize sales volume over profitability, the potential for financial instability increases, particularly for newer entrants with less capital cushion. 2. Emerging competitors and shifts in consumer preferences. The rise of companies like BYD and NIO from China is often highlighted, but the strategic movements of smaller players are frequently overlooked. For instance, XPeng's announcement of new models priced significantly lower than Tesla's premium offerings indicates a shift in consumer preferences toward more affordable EVs. Significance: this shift may force established players to reconsider their market strategies, potentially leading to a broader segmentation of the EV market. If affordability becomes a key driver for consumers, it could reshape product offerings and influence the overall direction of technological advancements, pushing companies to prioritize cost-effective solutions over luxury features. 3. Technological advancements beyond vehicles. While Tesla's advancements in full self-driving FSD technology and battery innovations receive substantial attention, the broader impact of these technologies on related sectors such as energy solutions is often neglected. Tesla's push into renewable energy storage and solar solutions could redefine its revenue streams and market position. Significance: the integration of EVs with energy solutions presents an opportunity for companies to create a holistic ecosystem that goes beyond vehicle sales. This could change the competitive landscape dramatically, as firms that successfully leverage energy technologies alongside EVs might gain a significant edge over those that focus solely on automotive sales. 4. Regulatory challenges and geopolitical factors. Reports on market dynamics frequently mention regulatory challenges but often fail to analyze their potential long-term implications. The interplay between government incentives, potential tariffs, and geopolitical tensions can dramatically influence market strategies. For example, China's aggressive export strategies and the potential for retaliatory tariffs from Western markets could create significant barriers. Significance: understanding these regulatory landscapes is crucial for predicting which companies may thrive or struggle. Companies that navigate these waters effectively, perhaps through local partnerships or compliance strategies, could emerge as leaders, while others may falter under the weight of compliance costs or trade restrictions. 5. The role of critical raw materials. The sourcing of critical minerals for battery production is a topic that often gets sidelined in discussions about the future of EVs. As the demand for EVs rises, so does the competition for lithium, cobalt, and other essential materials. Reports indicate that companies are investing heavily in securing supply chains, yet the potential volatility in these markets is rarely explored in depth. Significance: the ability of manufacturers to secure sustainable and cost-effective supplies of these materials will be a pivotal factor in determining their competitive viability. Firms that can innovate in recycling technologies or find alternative materials could gain a first-mover advantage, shaping the future of battery technology and EV production. 6. Investment trends in startups versus established players. Venture capital investment trends show a shift. with funding for EV startups declining significantly. While this is often interpreted as a cooling off of the market, it also signals a consolidation phase where only the most promising startups may survive. Significance: this consolidation could result in a market dominated by a few key players, limiting diversity and innovation. Furthermore, the decline in investment for early-stage companies may stifle the introduction of disruptive technologies, making it crucial for established players to innovate internally or through acquisitions to maintain their competitive edge. 7. Global expansion and market penetration strategies. Tesla's focus on expanding into emerging markets like India and Southeast Asia is often mentioned but not analyzed in depth. The unique challenges and opportunities presented by these markets, including varying consumer preferences and infrastructure readiness, are of paramount importance. Significance: companies that can successfully adapt their offerings to meet local demands and navigate regulatory landscapes may find lucrative opportunities. Conversely, those that enter these markets without sufficient strategy may face significant barriers, slowing their growth and impacting overall market dynamics. Conclusion: the competitive landscape of the EV market is intricately woven with challenges and opportunities that extend beyond the mere rivalry between Tesla and its competitors. Understanding the nuances of pricing strategies, technological integrations, regulatory impacts, and resource management can provide deeper insights into the future trajectory of the industry. As the market continues to evolve, stakeholders must remain vigilant and adaptable, recognizing that the most significant shifts may come from the least expected areas. 1. Tesla's market position and financial outlook. Tesla has solidified its position as a market leader in the global EV sector, maintaining over 45% of U.S. battery electric vehicle sales by 2023. However, its market share has seen a decline from over 60% in 2020 due to increased competition from companies like BYD and NIO. Despite stock volatility, projections suggest Tesla's revenue could reach $127.61 billion by 2025, fueled by rising vehicle deliveries and advancements in full self-driving technology. This shift underscores the importance of continuous innovation and market adaptation for Tesla to sustain its competitive edge. 2. Competitive dynamics and price wars. The competitive landscape is increasingly shaped by the rise of Chinese manufacturers like BYD, which has overtaken Tesla in overall sales. Price wars, particularly in the Chinese market, have resulted in significant price reductions across the industry, with Tesla cutting prices on its Model 3 and Model Y. This aggressive pricing strategy, while aimed at maintaining market share, raises concerns about profitability as margins thin. The dynamics between Tesla and its competitors highlight the ongoing challenges in balancing market capture with sustainable profit margins. 3. Investment trends and future projections. Despite a notable decline in venture capital investments in EV and battery startups in 2023, there remains robust interest in critical minerals and battery technology. Tesla's anticipated market capitalization could reach $2 trillion by 2025, driven by technological advancements and a broader product portfolio, including new models like the Cybertruck and an affordable vehicle priced at $25,000. This indicates a trend where established players are focusing on strengthening supply chains, securing critical resources, and innovating to maintain market relevance. 4. Challenges and regulatory factors. Tesla faces numerous challenges, including regulatory hurdles and potential supply chain issues exacerbated by geopolitical tensions and changing governmental policies on clean energy. As competition intensifies, especially from emerging Chinese manufacturers, Tesla's ability to navigate these complexities will be crucial. Regulatory changes can influence market dynamics and investor confidence, making it imperative for Tesla to remain agile in its strategic planning and operational execution. The interaction between these external factors and Tesla's internal strategies will significantly shape its future trajectory in the EV market. Three famous historical cases that parallel the competitive landscape dynamics of the global EV market, particularly relating to Tesla's position against rivals, are: 1. The rise of Ford and the decline of General Motors 1920s to 1930s. The early automotive industry saw Ford establish a dominant position with the introduction of the Model T in 1908. Ford's assembly line production methods drastically reduced costs and made cars affordable for the masses, capturing a significant market share. However, as the 1920s progressed, General Motors (GM) adapted by diversifying its offerings, introducing new models and leveraging marketing strategies to appeal to different consumer segments. This rivalry saw GM overtaking Ford in sales by the late 1920s. The shift highlights how innovation and adaptability are crucial in maintaining market leadership, akin to Tesla's current situation against emerging rivals like BYD and NIO. 2. The competition between IBM and Microsoft in the PC market 1980s to 1990s. In the 1980s, IBM was a leader in the personal computer market but faced increasing competition from Microsoft, which developed the Windows operating system. While IBM produced hardware, Microsoft focused on software, creating a dominant platform that became essential for PC functionality. The competition led to IBM's gradual decline in market share as Microsoft capitalized on its software advantages and ecosystem development. Similar to Tesla's focus on software advancements with full self-driving technology, the case illustrates how companies can leverage unique strengths to gain a competitive edge in rapidly evolving markets. 3. The Cola Wars between Coca-Cola and Pepsi 1980s to 1990s. Coca-Cola and Pepsi engaged in intense competition throughout the late 20th century, marked by aggressive marketing campaigns and product innovation. Coca-Cola was the market leader. However, Pepsi's strategy of targeting younger consumers and introducing new products like Pepsi Blue allowed it to capture significant market share. The rivalry escalated with price wars and promotional battles, leading to fluctuating market positions for both companies. This scenario is reminiscent of Tesla's price adjustments and marketing strategies in response to competitors like BYD and XPeng, showcasing how competitive landscapes can shift dramatically based on strategic decisions and consumer perceptions. Future outlook: predictions for the global EV market dynamics 2023 to 2025. As we approach 2025, the global electric vehicle EV market is undergoing transformative changes. Driven by fierce competition, evolving technologies, and shifting consumer preferences. This analysis focuses on the competitive landscape, particularly Tesla's position against rivals like BYD and emerging manufacturers, as well as broader market dynamics. Tesla's position in the market. In 2023, Tesla held a commanding 45% market share of battery electric vehicles (BEVs) in the US, though this figure represented a decline from over 60% in 2020. By 2025, projections forecast that Tesla's revenue could soar to approximately $127.61 billion due to increased vehicle deliveries and advancements in full self-driving FSD technology. Tesla's market capitalization might reach $2 trillion, largely attributed to its innovative capacity, production efficiency, and strategic market expansions. Competitive dynamics. The competition in the EV sector has intensified, particularly from Chinese manufacturers like BYD and NIO. BYD has emerged as a formidable rival, surpassing Tesla to become the best-selling EV brand globally in 2023. Its strategy focuses on offering competitively priced models, establishing a strong foothold in the Chinese market, which accounted for over 11% of new registrations in the same year. The price wars initiated by Tesla's price reductions on popular models have prompted competitors to follow suit, squeezing margins and intensifying the struggle for profitability. Market trends and price adjustments. The ongoing price wars are reshaping market dynamics, particularly in China, where compact and SUV EV prices dropped by up to 10% in 2023. As companies strive to maintain market share, Tesla's price cuts of up to 6% on its Model 3 and Model Y have prompted similar reductions by competitors. This trend reflects a critical shift toward affordability, compelling manufacturers to innovate while managing costs effectively. Investment shifts in future projections. Investment trends indicate a notable decline in venture capital funding for EV and battery startups, reflecting a saturated market landscape. However, investments in critical minerals and battery technologies remain robust as companies seek to secure supply chains amid rising demand. By 2025, Tesla's strategic initiatives, including new model releases such as the Cybertruck and a proposed $25,000 vehicle, are expected to bolster its market position. Technological advancements. Tesla's commitment to innovation, particularly in FSD technology, is central to its growth trajectory. By 2026, it aims to achieve fully integrated autonomous driving capabilities, potentially transforming vehicle usage patterns and creating new revenue streams. Additionally, advancements in battery technology and AI are anticipated to enhance vehicle efficiency and safety, further solidifying Tesla's competitive edge. Challenges ahead. Despite optimistic projections, Tesla faces several challenges. Regulatory hurdles, supply chain issues, and geopolitical tensions could impact operational efficiency and investor confidence. Moreover, the increasing competitiveness of Chinese manufacturers poses a significant threat as they seek to expand their presence in global markets. Market outlook for 2025. The competitive landscape for EVs is expected to evolve significantly by 2025. Key predictions include: 1. Increased competition. Tesla's share in new U.S. electric car sales may continue to decline as manufacturers like Hyundai, Kia, and European automakers gain ground. The entry of more affordable models will further complicate market dynamics. 2. Consolidation of manufacturers. A wave of consolidation among less profitable manufacturers is anticipated as competition drives down margins. This trend may result in a more concentrated market dominated by a few robust players. 3. Growing importance of energy solutions. Tesla's expansion into renewable energy solutions is expected to capture a larger market share, supporting revenue growth alongside vehicle sales. For technological innovations, the development of novel battery chemistries and recycling technologies is likely to enhance operational efficiencies and reduce costs, positioning Tesla and other manufacturers favorably against competitors. 5. Regulatory landscape. The regulatory environment will remain critical, with policies influencing operational strategies and investment decisions. Stakeholders must remain adaptable to changes in government incentives and environmental regulations. Conclusion. The global EV market is poised for significant evolution as we transition from 2023 to 2025. Tesla, while facing intensified competition, is strategically positioned to leverage its technological advancements and market presence. However, the landscape remains complex, with challenges that could hinder growth trajectories. Stakeholders must navigate these dynamics carefully to capitalize on opportunities and mitigate risks in this rapidly changing market. The coming years will be pivotal, shaping the future of electric mobility and determining the leaders of this burgeoning industry.